Question 1. Risk assessment and evaluation. Which of the following is a primary factor in determining whether an applicant qualifies for a preferred risk classification in insurance underwriting? A. The applicant's age relative to industry statistics. B. The applicant's income and employment status. C. The applicant's previous claim history. D. The applicant's occupation and lifestyle habits. Answer D. The applicant's occupation and lifestyle habits. Explanation. Risk classifications are assigned based on the level of risk an applicant poses to the insurer. Preferred classification typically applies to individuals who have lower likelihood of filing claims due to factors such as occupation and lifestyle. For example, someone in safe, low-risk occupation E. Office worker and exhibiting healthy lifestyle habits e.g. non-smoker, regular exercise is considered preferred risk. This classification results in lower premiums. While factors like age, income, and claim history may affect underwriting decisions, they are generally secondary to occupation and lifestyle when determining preferred risk status. Question 2. Scenario-based question. Underwriting process and documentation. Mr. Smith recently applied for a homeowner's insurance policy with Kentucky Insurer. During the application process, he disclosed that he had prior fire claim from 2 years ago. The underwriter reviews his file and notices that the fire was caused by an electrical malfunction in his home, but Mr. Smith has since had the electrical system fully inspected and updated. Based on this information, which of the following actions should the underwriter take? A. Approve the policy with slight increase in premium due to the previous claim. B. Deny the application outright due to the prior claim. C. Approve the policy without any changes as the fire occurred over 2 years ago. D. Approve the policy with conditional offer requiring proof of additional safety measures. Answer A. Approve the policy with a slight increase in premium due to the previous claim. Explanation. In underwriting, prior claims are important factors in evaluating the applicant's risk profile. Mr. Smith's prior fire claim due to an electrical malfunction introduces potential risk, but the fact that he has had the electrical system inspected and updated significantly reduces that risk. The underwriter should acknowledge the prior claim but assess the reduction efforts made by the applicant, i.e., the inspection and update. Given that this claim is not recent and the applicant has taken steps to mitigate the risk, slight premium increase to reflect the previous claim is reasonable. Denying the policy outright would be excessive as the risk has been mitigated, and conditional offer with additional safety measures would be unnecessary in this case. Question 3. Insurance products and policies. Which of the following is a key difference between personal lines and commercial lines insurance policies? A. Personal lines policies typically cover larger types of property such as commercial buildings, while commercial lines cover personal property like cars. B. Commercial lines policies usually have higher policy limits to accommodate the larger value of commercial properties and businesses. C. Personal lines policies are more expensive than commercial lines policies due to broader coverage. D. Commercial lines policies are only available individuals with corporate affiliations, while personal lines are for individual use only. Answer B. Commercial lines policies usually have higher policy limits to accommodate the larger value of commercial properties and businesses. Explanation. Personal lines and commercial lines differ primarily in the scope of coverage, policy limits, and the type of insured properties. Commercial lines are designed for businesses and cover larger, higher-value properties such as commercial buildings, machinery, and liability risks, often requiring higher policy limits than personal lines. Personal lines policies, on the other hand, are intended for individuals and cover risks associated with personal property, e.g. homeowners, automobile, and renters insurance. These policies are generally more limited in terms of coverage and typically have lower policy limits compared to commercial lines. The other options are incorrect because Option A confuses the coverage areas of personal and commercial policies. Option C is incorrect because personal lines tend to be less expensive than commercial lines due to lower coverage limits. Option D misrepresents the availability of commercial and personal lines policies. Question 4. Risk assessment and evaluation. Which of the following best describes a substandard risk classification in insurance underwriting? A. An individual with a low-risk profile, such as a non-smoker with no medical history. B. An individual whose risk factors, such as occupation and medical history, result in higher premiums due to increased likelihood of claims. C. An individual who qualifies for the preferred risk classification due to their healthy lifestyle and occupation. D. An individual who has A history of frequent insurance claims but no serious conditions. Answer B. An individual whose risk factors such as occupation and medical history result in higher premiums due to increased likelihood of claims. Explanation: a substandard risk classification applies to applicants who pose a higher risk to the insurer due to factors such as health conditions, occupation, or lifestyle. These individuals typically have a higher likelihood of filing claims, which leads to higher premiums. For instance, someone with a history of heart disease or a hazardous occupation may be categorized as a substandard risk. The other options are incorrect because option A describes a low-risk preferred individual, not a substandard one. Option C describes someone eligible for the preferred risk classification. Option D describes an individual with a claims history but no significant medical conditions, which doesn't necessarily result in substandard classification. Question 5. Underwriting guidelines and policies. Which of the following is a key consideration for an underwriter when determining whether to approve or decline an application for commercial liability insurance? A. The applicant's credit score and personal financial history. B. The business's prior claims history and risk exposure, including liability risk factors. C. The applicant's lifestyle choices and personal habits, such as smoking or alcohol consumption. D. The location of the business relative to the insurer's headquarters. Answer: B. The business's prior claims history and risk exposure, including liability risk factors. Explanation: when underwriting commercial liability insurance, the primary consideration is the business's history of claims and the risk exposure specific to the industry or business type. This includes evaluating factors like past liability claims, the nature of the business's operations, and whether there are adequate safety measures in place to mitigate risk. Other options are less relevant for commercial liability underwriting. Option A is more relevant to personal lines insurance underwriting. Option C pertains to personal underwriting factors, not commercial risk assessment. Option D may have some relevance, but it is not primary factor in liability underwriting. Question 6. Insurance contracts and legal framework. Under Kentucky law, which of the following is an essential element required for an insurance contract to be considered valid? A. The existence of a written contract signed by both parties. B. The insured's premium payment within 30 days of policy issuance. C. Insurable interest in the subject matter of the insurance. D. The insured's agreement to the insurer's exclusion clauses. Answer: C. Insurable interest in the subject matter of the insurance. Explanation: for an insurance contract to be valid under Kentucky law, there must be insurable interest, meaning that the policyholder must stand to suffer a financial loss if the insured event occurs. Insurable interest ensures that insurance is used for risk management rather than speculation. This requirement is fundamental for a legally enforceable contract. The other options are incorrect because option A is not a requirement for validity, as insurance contracts can be implied or oral in some cases. Option B relates to premium payment timing, not the core elements of contract validity. Option D pertains to policy clauses, which are negotiable but do not affect the validity of the contract itself. Question 7. Underwriting documentation and record keeping. Which of the following best practices should an underwriter follow when maintaining records for an insurance application? A. Keep the records indefinitely, regardless of the applicant's final decision. B. Retain records only if the applicant is approved for coverage. C. Ensure that records are kept securely with confidential information protected and disposed of according to legal requirements. D. Maintain records only for the duration of the policy term. Answer: C. Ensure that records are kept securely with confidential information protected and disposed of according to legal requirements. Explanation: underwriters are required to maintain insurance records in a manner that complies with legal requirements, ensuring that confidential information is securely stored and appropriately disposed of. This includes following data protection regulations and ensuring that personal and sensitive data is not exposed to unauthorized individuals. The other options are incorrect because Option A does not align with legal requirements for data protection, which mandate secure handling. Option B only applies to approved applicants, but all records must be kept in accordance with regulatory standards. Option D is incorrect because records should be kept beyond the policy term in case of claims or audits. Question 8. Rating methods and premium calculation. Which of the following is not typically a factor considered when calculating the premium for an automobile insurance policy? A. The driver's age and driving history. B. The vehicle's make, model, and safety features. C. The applicant's geographic location. D. The applicant's marital status and number of dependents. Answer D. The applicant's marital status and number of dependents. Explanation. In automobile insurance underwriting, premiums are primarily determined based on the driver's age, driving history, vehicle type, and geographic location. These factors directly impact the likelihood of claims, the value of the vehicle, and the risk level associated with the insured, while marital status and number of dependents might influence some other types of insurance, such as life or health insurance. They are generally not major factor in calculating auto insurance premiums. Question 9. Ethical and professional responsibilities. Which of the following actions would violate an underwriter's ethical responsibilities in Kentucky? A. Providing counteroffer to an applicant when the initial application does not meet underwriting guidelines. B. Disclosing an applicant's personal health information to third party without the applicant's consent. C. Using underwriting discretion to adjust premiums in cases where the applicant's claims history warrants it. D. Refusing to underwrite policy based on an applicant's age in accordance with legal guidelines. Answer B. Disclosing an applicant's personal health information to a third party without the applicant's consent. Explanation. Under Kentucky law and industry standards, underwriters are required to uphold confidentiality and avoid disclosing sensitive information about applicants without proper consent. Violating this duty by disclosing personal health information to third parties without consent is serious breach of ethical and legal obligations. Other options are acceptable actions. Option A is standard underwriting practice where counteroffer may be made to meet the applicant's needs. Option C is appropriate as long as it aligns with underwriting guidelines and criteria. Option D may be lawful if the refusal is based on valid, non-discriminatory factors and consistent with legal and regulatory requirements. Question 10. Emerging issues and challenges in underwriting. Which of the following trends is most likely to influence underwriting practices in the next decade? A. The increase in popularity of non-traditional insurance products like pet and cyber insurance. B. A significant reduction in claim frequencies across all lines of insurance. C. A complete elimination of underwriting discretion in favor of fully automated systems. D. A return to a more simplified underwriting process with minimal use of data analytics. Answer A. The increase in popularity of non-traditional insurance products like pet and cyber insurance. Explanation. Emerging trends such as the growing demand for non-traditional insurance products, e.g., pet insurance, cyber insurance, are significantly influencing underwriting practices. These types of insurance require underwriters to adapt to new risk models and new technologies such as cyber risk assessments. As the landscape of evolves, underwriters must adjust their practices to account for these specialized risks. The other options are incorrect because option B is unlikely as claims frequencies tend to vary but are not universally declining. Option C is an extreme position and is unlikely as human discretion is still essential in underwriting decisions. Option D suggests an outdated approach as data analytics are increasingly used to inform underwriting decisions. Question 11. Premium calculation and adjustments. Which of the following best explains why an insurance company may adjust premiums after a policyholder's midterm review? A. Changes in the policyholder's personal life, such as marriage or divorce. B. Decrease in the insurer's claim frequency across all policyholders. C. The policyholder's decision to switch to different insurance company. D. Increases in operating expenses by the insurer due to regulatory changes. Answer A. Changes in the policyholder's personal life, such as marriage or divorce. Explanation. Premium adjustments are commonly made after policyholders' midterm review to reflect significant life changes such as marriage, divorce, or the birth of child, which can affect the risk profile. These changes may lead to premium increases or decreases based on the insurer's risk assessment. The other options are incorrect. Option B insurer-wide factors, but individual premiums are more often affected by personal circumstances. Option C is not relevant to premium adjustments midterm as it implies switching companies. Option D may affect rates at renewal but is not usually reason for midterm premium adjustments. Question 12. Policy exclusions and limitations. Which of the following is most likely to be an exclusion under a standard homeowner's insurance policy? A. Damage from a tree falling on the house due to a storm. B. Vandalism to the property. C. Loss of property due to flooding. D. Theft of personal belongings from the house. Answer C. Loss of property due to flooding. Explanation. Homeowners insurance policies typically exclude coverage for flood damage, which is why flood insurance must be purchased separately if needed. Other risks, such as storm damage, A, or vandalism, B, are usually covered unless specific exclusions apply. The other options are generally covered under standard homeowners policies unless flood insurance is required separately. Question 13. Loss prevention strategies. Which of the following is an example of a loss prevention strategy that an underwriter may recommend to a business seeking property insurance? A. Installing a security system with cameras and alarms. B. Offering additional coverage for business interruption. C. Reducing the amount of deductible on the policy. D. Increasing the policy limits for property damage. Answer A. Installing a security system with cameras and alarms. Explanation. Loss prevention strategies are measures taken to reduce the risk of loss or damage. A security system with cameras and alarms helps to mitigate the risk of theft or vandalism, making it a common recommendation for property insurance. The other options, option B, relates to coverage options, not loss prevention. Option C and D involve adjusting policy terms, but they do not address the underlying risk prevention. Question 14. The role of the agent and broker. Which of the following best describes the role of an insurance agent in the underwriting process? A. The agent determines the premium rates for the policyholder. B. The agent acts as a liaison between the insurer and the policyholder to complete the application and provide necessary documentation. C. The agent decides which claims are valid and should be paid. D. The agent evaluates and assesses the risk factors for the insurer's portfolio. Answer B. The agent acts as a liaison between the insurer and the policyholder to complete the application and provide necessary documentation. Explanation. The insurance agent is responsible for assisting the policyholder in completing the application, gathering necessary documentation, and submitting the application to the underwriter. The agent serves as a bridge between the insurer and the policyholder. The other options, option A is incorrect. Premium rates are typically set by the insurer. Options C and D refer to claims management and underwriting evaluation, which are outside the scope of the agent's role. Question 15. Risk financing and alternatives. Which of the following is an example of retention in risk financing? A. Purchasing an insurance policy to cover potential losses. B. Creating a self-insurance fund to cover minor losses. C. Transferring risk to another insurer through reinsurance. D. Implementing risk control measures such as safety protocols. Answer B. Creating a self-insurance fund to cover minor losses. Explanation. Retention in risk financing refers to the practice of keeping and managing a portion of risk within the organization rather than transferring it to an insurer. Establishing a self-insurance fund is a form of retention where an entity sets aside money to cover its own minor losses. The other options involve risk transfer or control, not retention. Option A and C, transferring risk. Option D refers to risk control, not retention. Question 16. Types of insurance policies. Which type of insurance provides coverage for injuries or damage caused by the policyholder's business operations? A. General liability insurance. B. Property insurance. C. Workers' compensation insurance. D. Life insurance. Answer A. General liability insurance. Explanation. General liability insurance covers claims made by third parties for injuries or damages that occur due to the business's operations, such as slip and fall accidents or property damage caused by the business. The other options. Option B covers damage to the business property itself. Option C covers employee injuries but not third-party claims. Option D is unrelated, as life insurance covers the life of an individual, not business operations. Question 17. Insurance fraud detection. Which of the following is a common sign of potential insurance fraud that an underwriter may look for during the underwriting process? A. The applicant has been insured with the same company for several years. B. The applicant provides conflicting information regarding past insurance claims. C. The applicant regularly updates their contact information with the insurer. D. The applicant receives regular health checkups from their doctor. Answer. B. The applicant provides conflicting information regarding past insurance claims. Explanation. Conflicting information such as discrepancies in the applicant's claim history, may signal potential insurance fraud. Underwriters are trained to identify such inconsistencies as they often indicate fraudulent intent. The other options are not typical signs of fraud. Option A is normal behavior. Option C and D may indicate routine actions but are not red flags for fraud. Question 18. Types of risk in underwriting. Which of the following best describes moral hazard in the context of insurance? A. The risk that a policyholder will be involved in a dangerous activity leading to injury or damage. B. The risk that an insured will take on more risk because they have insurance coverage. C. The risk that a policyholder will fail to disclose material facts about their health or lifestyle. D. The risk that insurance claims will exceed the premium revenue collected. Answer: B. The risk that an insured will take on more risk because they have insurance coverage. Explanation: moral hazard refers to the tendency of insured individuals to take on greater risks or behave less cautiously because they know they have insurance coverage. This can lead to higher than expected losses for the insurer. The other options: Option A refers to physical risk, not moral hazard. Option C describes concealment of material facts, which is more related to insurance fraud. Option D describes a financial risk to the insurer but not moral hazard. Question 19. Policyholder rights and claims. Which of the following is typically a requirement for a policyholder to file a claim under an insurance policy? A. The policyholder must have a police report if the claim involves theft or vandalism. B. The policyholder must pay the full premium upfront before a claim is filed. C. The policyholder must submit the claim within 30 days of the policy issuance date. D. The policyholder must provide proof that they are at fault for the loss. Answer A. The policyholder must have a police report if the claim involves theft or vandalism. Explanation: for claims involving theft or vandalism, most insurers require a police report as part of the claims process to verify that the incident occurred and to assist in the investigation. This is a standard procedure for property and casualty claims. The other options are incorrect because Option B relates to premium payment terms, not filing. Option C is inaccurate. Claim deadlines are typically based on the incident, not the policy issuance date. Option D is incorrect. If the policyholder does not need to prove fault in most cases, as liability or coverage details are considered. Question 20. Reinsurance and risk management. Which of the following describes the primary purpose of reinsurance in the insurance industry? A. To allow insurance companies to cover claims for high-risk individuals. B. To reduce the insurer's overall risk exposure and improve financial stability. C. To ensure policyholders receive compensation for claims above policy limits. D. To provide coverage for natural disasters in specific geographic areas. Answer: B. To reduce the insurer's overall risk exposure and improve financial stability. Explanation: reinsurance is a method by which insurers transfer a portion of their risk to other insurance companies, reinsurers, to reduce their overall exposure to large losses. This allows insurers to stabilize their financial position and continue to provide coverage to policyholders. The other options are incorrect because Option A refers to under decisions, not reinsurance. Option C is more about policy limits and claims handling. Option D pertains to specific coverage for natural disasters, not reinsurance. Question 21. Insurance coverage for business interruption. Which of the following types of insurance would cover losses due to the temporary shutdown of a business after a covered event, such as a fire? A. General liability insurance. B. Business interruption insurance. C. Workers' compensation insurance. D. Property insurance. Answer: B. Business interruption insurance. Explanation: business interruption insurance covers lost income and expenses incurred during a period when a business cannot operate due to a covered event, such as a fire. This insurance helps business owners recover financially during a temporary shutdown. The other options: Option A covers third-party injuries or damages. Option C covers employee injuries but not business operations. Option D covers physical damage to property and not lost income. Question 22. Underwriting and policy renewal. Which of the following is the most common reason an insurer might decide not to renew a policy? A. The policyholder has made no claims during the policy term. B. The policyholder has had multiple claims during the policy term. C. The policyholder has a perfect payment record. D. The policyholder is in good health and low risk. Answer: B. The policyholder has had multiple claims during the policy term. Explanation: insurers may choose not to renew a policy if the policyholder has filed multiple claims during the policy term, as this indicates a higher risk of future claims, which may lead to increased costs for the insurer. The other options, option A and C, are favorable factors, not reasons for non-renewal. Option D suggests low risk and would not typically be a reason for non-renewal. Question 23. Policy provisions and coverage limits. What is typically the effect of a policy provision known as a coinsurance clause? A. It limits the insurer's total liability to the policyholder. B. It requires the policyholder to pay fixed amount for each covered loss. C. It reduces the amount of coverage available if the policyholder does not maintain adequate insurance. D. It increases the premium if the policyholder files claim. Answer: C. It reduces the amount of coverage available if the policyholder does not maintain adequate insurance. Explanation: a coinsurance clause typically requires the policyholder to insure their property for a certain percentage of its value, e.g., 80%. If the policyholder fails to meet this requirement, the amount of coverage available will be reduced in the event of a loss. The other options: Option A is incorrect because the clause does not limit total liability. Option B refers to a deductible, not coinsurance. Option D is incorrect because coinsurance does not directly affect premiums after a claim. Question 24. Life insurance underwriting. Which of the following is a standard factor considered during the underwriting process for life insurance? A. The policyholder's health status, including medical history and lifestyle choices. B. The policyholder's preferred beneficiaries. C. The policyholder's choice of coverage amount. D. The policyholder's marital status and number of dependents. Answer A. The policyholder's health status, including medical history and lifestyle choices. Explanation: life insurance underwriters primarily consider the applicant's health, medical history, and lifestyle choices, such as smoking or alcohol consumption, to assess the risk of insuring the individual. These factors directly affect the underwriting decision and premium rates. The other options, Option B and C, may influence policy structure, but the primary factors in underwriting, Option D, can influence other types of insurance but is less significant for life insurance underwriting. Question 25. Auto insurance premium calculation. Which of the following factors would likely result in a higher auto insurance premium? A clean driving record with no accidents or violations. B. A higher deductible chosen by the policyholder. C. The policyholder lives in an area with a high incidence of auto theft or vandalism. D. The vehicle is a low-value, older model with minimal repair costs. Answer C. The policyholder lives in an area with a high incidence of auto theft or vandalism. Explanation: living in an area with high rates of theft or vandalism increases the risk of loss or damage to the vehicle, leading to higher premiums. Insurers factor in regional risks when determining premiums. The other options, Option A, would generally lead to lower premiums due to the low risk of claims. Option B would usually result in lower premiums due to the policyholder assuming more of the risk. Option D typically lowers premiums due to the low replacement and repair costs associated with the vehicle. Question 26. Liability insurance coverage. Which of the following best describes what general liability insurance typically covers? A. Damage to the policyholder's own property. B. Injuries or damages caused to others by the policyholder's actions. C. Losses related to employee injuries on the job. D. Medical expenses for the policyholder in the event of an accident. Answer: B. Injuries or damages caused to others by the policyholder's actions. Explanation: general liability insurance covers the policyholder's legal responsibility for injuries or damages caused to third parties, such as slip and fall accidents on business premises or damage caused by the business's operations. The other options are incorrect. Option A would be covered by property insurance. Option C would be covered by workers' compensation insurance. Option D would be covered by health or accident insurance. Question 27. Underwriting and risk assessment. Which of the following factors would most likely increase an individual's auto insurance premium? A. The individual has a history of accidents or traffic violations. B. The individual has a high credit score. C. The individual drives a vehicle with safety features like airbags and anti-lock brakes. D. The individual drives fewer than 10,000 miles per year. Answer A. The individual has a history of accidents or traffic violations. Explanation. A history of accidents or traffic violations indicates higher risk for future claims, which generally results in higher premiums. Insurers assess past behavior to predict the likelihood of future incidents. The other options, option B, typically results in low premiums, as a good credit score suggests financial responsibility. Option C and D are factors that would generally lower premiums, not increase them. Question 20. Insurance policy terms and conditions. What does a deductible represent in an insurance policy? A. The maximum amount the insurer will pay out for a claim. B. The amount the policyholder must pay out of pocket before the insurer will cover the rest of a claim. C. The portion of the premium that the insurer keeps as profit. D. The difference between the actual value and the insured value of property. Answer B. The amount the policyholder must pay out of pocket before the insurer will cover the rest of a claim. Explanation. The deductible is the amount the policyholder must pay from their own pocket before the insurance coverage kicks in to pay the rest of the claim. A higher deductible generally results in a lower premium. The other options. Option A refers to the policy's coverage limit, not the deductible. Option C is incorrect as the deductible is part of the claims process, not the insurer's profit. Option D refers to the underinsurance issue, not the deductible. Question 29. Claims process and adjustments. In the claims process, what is the role of an insurance adjuster? A. To evaluate the risk associated with insuring the policyholder. B. To determine whether the claim is valid and how much compensation the policyholder is entitled to. C. To handle all customer service inquiries related to the insurance policy. D. To sell additional coverage or endorsement to the policyholder. Answer B. To determine whether the claim is valid and how much compensation the policyholder is entitled to. Explanation. An insurance adjuster investigates claims to determine their validity and assess the amount of compensation that the policyholder is entitled to receive based on the terms of the policy and the loss. The other options. Option A is the role of an underwriter, not an adjuster. Option C refers to customer service, which is separate from claims handling. Option D refers to the sales process, not claims evaluation. Question 30. Property insurance coverage. Which of the following is typically excluded under a standard homeowner's insurance policy? A. Theft of personal property. B. Water damage from a burst pipe. C. Earthquake damage. D. Fire damage to the structure. Answer C. Earthquake damage. Explanation. Most standard homeowners insurance policies exclude coverage for earthquake damage. Policyholders typically need to purchase separate earthquake insurance to cover this type of risk. The other options are typically covered under standard homeowners insurance. Option A covers theft of personal property. Option B covers water damage due to a burst pipe unless it is due to neglect or lack of maintenance. Option D covers fire damage to the property.